recording link. So anyway, thanks for tuning in, and for most of you, you're going to learn about or are interested in, who's not, what's the value of my business, or what's the value of somebody else's business. It's just good to know that, whether you're selling now or you're selling 20 years from now. And Chad's going to be on with me here. Chad is a specialist in SBA loans. And so we've got a little slideshow, and we're going to try to keep it nice and tight, not try to go too deep. And we're going to call this the Valuation and Lending SBA 101 class. And if you got, more probing questions or deep ones, for sure, just you can save that to the back end. We'll probably be able to get through this in about 20, 25 minutes. However, Chad and I have a tendency to kind of go on a little bit, so it could be in an hour and a half. No,
it could be tomorrow.
So let's get into it. So there's our handsome mugs. I've been in business brokering for about 6 years now. I've raised my family up in the wine country. My boys are out of the house, and I'm living in Marin now. Along the way, I owned a winery, and I actually played professional golf, and still have a golf school that I do on some weekends up in Napa, which is pretty cool. Chad, you want to share something about yourself?
Yeah, I've been in this industry for over 15 years. I got into it when I really met my wife. She was just closing on her business. She owns a comedy club, and I met her the day she closed on her loan, which was an SBA loan. And I've always been attracted to that entrepreneurial spirit that people have. And I thought, well, how can I get into that? And met a couple of people and said, try to get into the banking side in the SBA. And so I was 15 years ago, and I haven't looked back since. So I've been doing SBA loans for 15 plus years. I don't know, it's about $350 million worth of SBA loans over that time. And I really enjoy it. Love biking. I grew up in the wine country. I've raised my kids like Kris in the wine country as well. Exchange Bank is located in Santa Rosa, but lends all over California.
I think what we both have in common, part of the fun part of our business, is we get to meet business owners. And I'll tell you what, it's no easy feat being a business owner. So, I've crashed and burned as a business owner. And I've had another business for 25 years, and it's not easy. It's not, you live and breathe it. And part of, I think, both of our satisfaction comes from getting somebody across the finish line, whether it's selling their business or finding the right buyer. That's a pretty cool part of the business. So I'm like a matchmaker, and Chad's kind of like, lubing the gears, so to speak, to kind of keep things moving. Yeah. And we'll get into what the advantages are of using SBA versus doing it yourself. So hopefully some of these will come out, and it'll be worth your time. So let's dive in. So understanding your goals. Just like in everything else, there's a plan that ideally, through talking through a team, whether it's your CPA or somebody to just give you an idea of what it's going to take to exit. Whether you're 70 years old, whether it takes 10 million or takes 1 million, there's definitely decisions you can make along the way, because there's a lot of forks in the road that can help you make smarter decisions and get you there faster. And that's kind of partly what this is about. So preparation is key. So basically these are 5 steps. I put in 6, but valuation is what I'm going to get into in a second. I think you'll find that's fairly simple, but at the same time, there's a lot of variability to what would help your business get to the higher end of a range that is typically done through a valuation report. Auditing, it's just kind of good to know what a banker is going to ask for, or what the buyer is going to ask for when you are selling your business. And it's just a good idea to start kind of getting those things tidied up. Again, it's just good to be organized. You might out of the blue get an amazing offer from somebody, and if your stuff's all ready to go, it'll move along faster. Packaging is really just more on the sales side, is packaging really to make the business look really attractive, but also make it very streamlined so the buyer can get answers pretty darn quick. So next, kind of what I'm doing is looking for buyers quite often, because I'm working on the seller side most of the time, but also helping sellers, or I'm sorry, basically helping a seller find a buyer and a buyer find the right seller. And that's kind of what's nice. I kind of specialize in the trade industry, so I know quite a few of the plumbing and HVAC businesses, and I have lists, and I'm going to their website, and I'm seeing their trucks on the road, and I'm just kind of paying attention to the market. I'm also in manufacturing industry. I just happen to gravitate towards industries where I really enjoy people that make things and do things, and that's that's why I really like following the trades and so forth. Team building, that's really just putting your team together. Chad might be a partner here. I might be as a broker, but the team members are also your key people in your operation, making sure they're happy and they're going to stay on board. So your team is a big part of either buying or selling. So here's how we'll get into the valuation part. There's professional appraisings, which is typically used for audits for the IRS maybe, or a divorce or a partner buyout. Typically, I'd say businesses that are doing, say, less than a couple million, usually the broker's opinion of value usually does the trick. Chad, I'm going to throw it your way for a second. I know when a buyer is looking to get a loan, you guys will actually hire an appraiser to do an appraising on the business to see if it justifies the loan. What are your steps for that, or what would you like to see from the buyer?
Yeah, that's correct. We're required by the SBA to order a independent third party report valuation. And these are companies that basically are just going to comb through the numbers, then the tax returns. If there's equipment, inventory, we're going to want a list of the equipment, trucks. We want to know the make and model, VIN numbers, mileage, because they're going to want to value that as well. That's part of the purchase. So we want to know, we give liquidation value is what we look for on equipment. But then they'll come in and look at everything. They'll probably reach out to the seller, introduce themselves, ask a few questions, probably a 20-minute conversation, and come up with a value in about 10 days time. The seller can go ahead and get an evaluation, but we can't use it. We have to have an unbiased evaluation. A buyer could go get an evaluation, and we could theoretically use that appraisal if they so choose. No.
So I think, like the bank, we're looking for 3 years of tax returns. A buyer is basically buying your reputation or your history. Even though the seller might think, oh, my business is going to triple in the next few years, the buyer's not buying that. He's hoping it's going to do that, but the buyer is actually. So we need 3 years of tax returns, and we need 3 years of P&Ls. Sometimes we might ask for the lease and some other things, equipment list, but it's usually just starts with the 3 years of financials, because what that's going to get us is it's going to get us to this point right here. Now, this is a sample worksheet where I've taken, I'm going to try to use my cursor so you can see it. I've taken, gross sales on this top line, and then cost of goods below it, and variable, other things, this other income statement in this case. And then what were the expenses? And so you boil it down to basically what's the net profit plus what's the salary, what's the fair market salary of that owner. In this case, it was 300,000, but you'll see down below is where it kind of gets into the weeds a little bit. And this is where the bank and us brokers see the business a little different, because they're not as excited about the add backs. But I'll let you get your piece in there in a second. Yeah. So basically, the salary plus his payroll tax, that's going to add up to this SBA discretionary earnings. Now, what is that? That's SDE stands for Seller's Discretionary Earnings, which is pretty darn similar to EBITDA. So all EBITDA is, it just means amortization, depreciation, and interest are added. We actually are not added. It's before those things are added. So we go by SDE. Oftentimes they're almost identical. And some businesses, the depreciation is massive with equipment and trucks and all that stuff. And some other businesses, there's very little difference between the two. So you'll see here at the bottom, these are some of the add backs. State tax. In this case, I put in personal health care. If your personal health care is being run through the business for the owner, that's going to be added to the bottom line. Because that's a discretionary, that doesn't need to be done by the new buyer. Same with auto. Let's say he's, paying the lease for his wife's car or son's car. That can be actually added back. In this case, I put fair market value for manager. In some businesses, the seller is going to either pay himself zero or not enough, or overpay himself or a relative, and we need to adjust that to what it would cost to put a manager in to take that role. Okay, what do you see in there, Chad, that you can or cannot use when you do your guys' recast?
Yeah, we see eye to eye on majority of the expenses or add backs, Chris. I mean, it's the depreciation, amortization, interest expense, owner's compensation. But we may add back a buyer's salary because the buyer is going to buy the business. They're going to want to take a salary as well. They may not take the full amount, and for in this example, 300,000. Maybe they only take 150,000. So we can add back 150,000 back. It's going to be case by case on any buyer there. If there's one-off expenses, if there's say legal and accounting expense shot up one year because maybe there was a lawsuit, maybe there was a patent, some intellectual property they're looking for, so that spiked the legal costs and then the accounting costs, we can add back that difference by looking at the other previous years and say, okay, there's $10,000 credit we could add back because it was a one-time expense. Again, you go down to personal health care. It depends. If we have a spouse that works outside the business and this particular buyer doesn't need health care and they've got already health care through their spouse, then we can certainly add this back. Otherwise, the bank looks at it as like, well, this is going to be an expense to the new buyer. So I think it's kind of case by case with each buyer in that sense.
This is interesting. So basically, in this sample, and I'm just looking at my math here. I mean, I just plug these numbers in. Is in 17, this hypothetical case is the profits for 216,000. Then it jumps up to $1 million, and then it basically stays around there, goes to 950 or 949. So typically, what we're doing, we're weighting the most recent year. In this case, you can see weighted average 60%. Then 2 years ago, we're weighting it at 30%, and then 3 years ago. So we're putting more value or weighting on the most previous year. I'm working with another business right now. I'd love to get Chad's input on this. It was exactly the opposite. 3 years ago, the guy had nice profits. I'll just make up a number. It's like 450,000 in profits. The next year, it dropped to 350. And then the year after that, it dropped down even more to 200. So it basically lost half of its value.
Yeah.
That is a red flag. How do you guys rate that?
Yeah, that's a red. I call it I'll probably say yellow flag at that point. It may not necessarily be a red flag, but yeah, if it's in this downward trend, and that's why we look for 3 years tax returns. We want to see where we're lending on the business. Is it upward? If it's down, is it flat? Up or down? If it's in a downward trend like that, Chris, hopefully there's a bottom. Hopefully it's hit bottom maybe by the last tax year, 2019 in this case. Did they lose some accounts and they were 20, 30, 40% of the revenue? Who knows? Did a key employee leave? We don't know. Is the seller, the owner, have one foot out the door and is just not not into the business anymore. If there's a good story behind it, I think then we could get comfortable with it. But yeah, it's cause for concern with that. Another thing to come back to the previous slide in terms of valuation going forward this year, because it's kind of the new normal now, is with the virus and with shelter in place and companies not opening fully at 100%. Valuators are going to want profit and loss statements month to month through at least May and into June, so that we can see if the business was affected or not, and that could be reflected on these financials too. I mean, business may not be affected, but it may be, but it gives us a good idea. And we would want to see that actually in this downward trend. If the year to date shows that it's kind of bounced back up, then that's great. We want to see how did it get there?
And from what I've heard, everybody understands there's going to be a dip in most businesses. I would say, I bet the plumbing business and HVAC business is kind of doing okay in all this. There's some business, I mean, I would think of all the industries, the trade businesses are almost, I'd say, almost economy proof. And I'm going to say in some sense, pandemic proof. It'd be interesting to, hear, more people weigh in on that. I thought the same thing was in auto repair, but auto repair, it has dipped quite a bit. You'd think people are still repairing their cars, and it's dropped quite a bit. So let's go to the next slide. So basically what we're doing is we're taking those last 3 years, and then I'm basically trying to get a weighted average. In this case, combined, you'll see at the very bottom there, it says basically I'm just going to divide that by 100. So that makes this guy's average profit was $898,911. So that's going to be his SDEs. Let's just call it $900,000. So how do we get the multiple? Well, I'm going to use databases that are oftentimes from deals that have been SBA financed, and then the bank reports it to services like this one's called peer comps. In this case, we got 71 transactions. I'll put in the parameters for the gross and the profit, or SDE, for that business. And that's going to help us get pretty darn close to what the multiple is going to be. So you can just see some of the ones down here of actual sales. This one had an SDE of 365,000. Okay. Now he happened to sell at 3.24 that. Now that's pretty high actually for a plumbing business. So sometimes you're going to have, you end up getting kind of an average. So, because you get some other ones here, it's 2.12. If we look through all these 71, I guarantee there's going to be some of them that are under 2. So I'm usually looking at most businesses that are doing, say, less than $500,000 in profit. It's usually going to be 2x to maybe 2.5x. There'd have to be some amazing reason why it's going to be higher than that, like reoccurring, revenues. Like if you, this is why, buyers love service HVAC and maintenance, because they're regular, they're monthly, they're going back, with the same clients, whether it's Apple or property managers, and it's more predictable than having to get, phone calls, and, one customer and you're done and you don't see them again for 5 or 8 years. So everybody loves those regular, predictable revenues coming in. Wouldn't you agree on that, Chad?
Absolutely. For sure. You want to have that servicing contracts involved, and yeah, it's like an annuity at that point. You're getting that regular income monthly. It helps.
So in this case, what I'd do is I would take the most relevant, I'd take this 71 and I'd boil it down, get rid of the ones that are like 4x, I'd get rid of the ones that are 1x, and I'd get it down to a pretty tight average. And it probably, in this case, I'm just looking at these 6 numbers. I mean, this is kind of on the high side, but I'm going to say I would probably give this a range of about probably 2.8 to about 3.2. I usually don't see plumbing businesses going that high. Maybe this one that's 590,000. So the higher your profits are, the more the higher that multiple is going to be. I mean, when I see a business that's usually a million or more, or a million to 2 million, then it's getting into that high twos, even mid threes. So that's the way we're kind of going. Chad, what are you looking for when you guys are? What's the security you're really liking to see in the business?
Well, we always say that we can only lend what we see on paper. And when I say paper, it's tax returns. We like to see the profit and loss statements, but we want to see the actual tax returns. Those are legal documents, and that's going to show us the true cash. I mean, if it's a cash intensive business, that makes it challenging. But when we're looking at tax returns, we like to see some healthy trends. We like to see that there's not one account that is generating 50-60% of the revenue. That can lead to the previous example you were talking about, that maybe it starts driving it down. I think the value tends to change based on the amount of equipment. If there's machinery, there's trucks, there's large inventory, that might change the value too, because this would be based on pretty much just the numbers on the tax returns. So if it's strong has a lot of vehicles, then that's going to add value to the property as well. The business.
Well, and that segues right into this slide. Basically, why buy a business? It's you're buying the momentum in the market. Mm-hmm. You're buying desirable equipment and inventory. You can just read down this and see, maybe this guy's got some ace, guys in the crew that are going to do great work and are 10 years in, and they're going to, so that's what you could be buying, or it could be the customer base. Maybe you're buying that account with some huge property manager or big corporation that's is guaranteed money. So
it's invaluable, Kris, I think, to have those.
Yeah. So this is, so Chad, talk about, because it was enlightening to me when I asked him, what's the value of getting an SBA loan versus just getting a regular loan? And I'll just pass the ball off to you. It was something about being able to do only 10%, maybe 15% down versus a normal loan.
Yeah, I think and that's the gist of it really, is when you're looking to buy an existing business, I think there's some security. You're buying reputation, you're buying historical, how the business has performed, you've got good employees there. But the best part is really, we're looking for a minimum of 10% down as an injection, which is fantastic. And it's a 10-year note. Meaning it's paid off in 10 years. There's no prepayment penalty, so you could pay it off sooner. Whereas if you were looking to do maybe traditional financing, conventional, you're looking at 25% down and only a 5-year note. So your payment's going to be larger, so that may put a strain on the cash flow of the business. If you're looking to start a business, say, well, you know what, this may be too much. I think I'll just start my own business. We're going to lend 30% of the startup costs. So there's a much bigger capital injected into the beginning to start up, and you have no idea if you're going to be able to get the accounts. We look at, if it's a projection-based transaction like that, we don't know if those projections are even attainable. So it's why I always steer people to say, well, maybe you ought to look at an existing business, because you've got the historicals there. You only have to put 10%. You've got a reputation there, and then you have a seller willing to help make it successful as a transition to a new owner. They'll introduce you to the clients, the customers, the contracts, which are invaluable. So I think that really helps. Trying to get your own contracts, your own service, it can be a grind, and it may not be successful at that point.
Cool. I'll let you go right into this slide.
Yeah, I think, when we look for, if you're buying an existing business, you want to buy your competitor, if you want to buy, or there's buyers out there looking for a business, there's a couple of things we really look for. One is experience level. We want to make sure that you know what you're doing. There's translatable experience. I think 9 times out of 10, the business fails because of not because of the economy, because it's a lack of experience on understanding the books, the people, I always say you're going to buy a stock. You buy a stock that you know. You don't buy because of the name. You do some research on it and you understand what it does. Same thing with the business. Liquidity and collateral. We always want to make sure that you've got enough liquidity, that you've injected your minimum, but you also have some set aside because there might be some capital improvements you might need 6 months, a year from now. So we want to make sure that you do have some reserves. And then collateral, a lot of times these are goodwill transactions, so they're unsecured. And the SBA says, well, Mr. or Mrs. Buyer, if you have lendable equity in a property, we have to take it as collateral. Lendable equity is based on a percentage of what the value of the home is. And just as a round number, we'll say your value of your home is $1 million, and there's a discount rate. And the single family homes have a discount rate of 15%. So you take 15 from $1 million, it leaves you with $850. You have a $500,000 mortgage on the home. So 500 from 850 leaves you with 350,000 of lendable equity in your property. And that helps. That really helps the bank. It helps the SBA get more comfortable with the transaction. It's not required if you don't have collateral, but if you do, we have to take it. Another one is overall character. If you've got a buyer there that is just knows what they have, they got experience level, they got the liquidity, but they just don't pay their bills. They're not responsible enough. That's a character flaw. That's a character issue that, as a bank, we worry about, well, are they going to pay our loan? Are they going to pay us back? And so we want to make sure that they have a decent credit and they just didn't walk away from a home. If they have a short sale, foreclosure, that's okay, but it's got to be a good story. If they just walk away like, well, it's upside down, I'm just going to go. Probably not. It's not going to help in that case. In these type of industries where license is key, the buyer has to have a license. There is a way to go around that. And generally the SBA says that the buyer has to have the license in place before we close. However, we can do what we call the RMO, which is the responsible managing officer. And then there's the RME, which is responsible managing employee. And that's where the employee uses the officer's license while he or she is working on getting their license in place. You have a year to get that. And the SBA would like to see a kind of a breakdown of the process of when you're going to take the classes, when will you take the test, when would you get the license, so that we have it documented and know, okay, within this time frame, that buyer will have the license in place. And the new normal now, as I mentioned that before about the virus. Every business has been infected, good, bad. There's different guidelines in place right now and for the foreseeable future. We always want 2 years projections when we're looking to buy a business. The first year was month to month, and the second year was an annualized numbers. Now going forward, we want 2 years month to month. We want to see how the borrower thinks that business is going to perform at 80% or 70%. Most businesses may not be at 100% for a while. So we want to see that. The other one is an assumptions page that goes along with the projections. That's kind of like a roadmap to tell us how you're going to get to those projected numbers. And if a business is affected by the government mandates, how are you going to overcome those? Do you have a plan A, a plan B, plan C? Will there be other avenues of revenue that you can come up with? We want to see all that. And then, as I mentioned earlier, we want the most up-to-date financials from the seller as at least through May, because at least that's going to give us an idea of how the business was or was not affected through this shelter in place or the virus. And if we have an annualized number, we can't see if there was a reduction in payroll, a reduction in rent. So by having it month to month, we can really pinpoint, oh yes, for 2 months they didn't have payroll. 2 months they had 20% payroll reduced, whatever it happens to be. And the business evaluators are going to request this too now. It used to be we could have financials that were 60, 90 days old, and that's no longer the case.
Great.
Oh.
So I'm going to skip down. Well, let's just bounce into this really fast. So at the end of the day, when you're looking to buy another business, basically, this is just a quick and dirty kind of scorecard is, what's the opportunity? And then below that's timeliness. Like right now, you could say it's horrible timing to buy a business, but it could be the best time to buy a business. As Chad and I were talking about earlier, there's a lot of action out there. There's a lot of buyers looking for deals. And because, look at restaurants and look at a lot of other businesses, there's capitalism in action. Finance, I mean, I'll tell you what, guys out there, this is like the best time ever to maybe buy your real estate. Chad was saying that, why don't you fill them in on what's the deal right now for someone to be able to buy their real estate?
Yeah, it's pretty crazy right now. I mean, we all know how residential rates are at all-time lows. Well, commercial real estate prices are pretty much there too. They're not as low as residential, but they are in comparative, they are at all-time lows. And you can get into buying your building for as little as 10% down. Just like buying a business, you can buy a real estate for your business, 10% down. Some of the government guaranteed loans, it's called an SBA 504. It's a 25-year fixed rate right now. The rate came out yesterday at 2.6% for 25 years, fully amortized. Now that's the government money, and that's pretty crazy. I've been doing this for a long time, and that's as low as I've ever seen it. And so, I think property values are going to soften here in the next few months. And as Kris said, it might be a really good time to jump on an opportunity like that.
Yeah, no doubt. And so I'm just going to jump to the last slide, which is basically, there's our contact information if you got more detailed questions. And everybody, thanks for checking in, and hopefully you got some information about, understanding how we get the value of your business. At the end of the day, it really is kind of luck and timing. I can give you follow perfect methodology in how to get it. But if you got somebody who really wants your business at the right time, you're going to get a premium. And at the same time, if you might, you put your business out there and it's like fishing. I mean, there might be no fish in the water at that particular moment. Maybe two months prior or 2 months in the future, it changes. At the same time, plumbing businesses are a little bit of a challenge to sell. That's why probably the best acquirer of your business is going to be an existing plumbing business looking just to have a bigger footprint. There's just not enough licensed guys who want to own their own business. So that's part of the challenge, why sometimes you put it out there and it's like, doggone, I got a great business. It's just there's not enough buyers because there's not enough people with licenses. So still, it is kind of luck, and it's not a bad idea just to be ready and kick around and talk to somebody. Hey, interested in possibly buy my business? Are you selling your business? That's the way things can get done. Is usually it's going to be your competitor or sometimes, it could be somebody from Southern California or whatever wanting to get into this area, but it's nice just to be ready for it. So, Chad, thanks so much for sharing. And
Thank you, Kris.
You want any closing remarks on your side?
I think just to touch on that about selling the business, the best buyer might be right in-house. There might be a key employee that may have the license, maybe doesn't have the capital for the injection. Then maybe that's where an SBA loan comes in. Or maybe they can find a partner, an independent, a third party that can come in with the down payment, with their license together. They're one solid borrower. They've got the license, they've got the down payment, and they already know the industry. They already know the accounts, the customers. I think that's a nice transaction right there.
Well, great. Well, with that being said, I wish everybody luck in getting through all this and growing your business and all that. And thanks again for watching.
Thank you.
Thank you, guys.
Thanks, Art, for your
Have a good weekend. Yeah, Chad, drive careful. Have fun.
Thank you. Yeah.